Welcome to Alpha Insights. I'm Harper. Today we're talking about those lightning fast moves in tiny stocks. You know, the microcaps that suddenly go vertical. My guest is Aiden, who watches social flows and options activity closely. Hey Aiden, great to have you. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks, Harper. Great to be here. Yeah, honestly, I was a bit surprised by how quickly a couple of recently listed reverse takeover companies ran today. It really felt like classic low float runner season.
The real question here is, what exactly makes something a low float runner?
Good place to start. In plain terms, a low float name usually means the public float is under 10 million shares, and the most explosive moves tend to happen when the float is under 5 million. With so few shares available, even modest buying can push the price a long way.
Okay, that makes sense. But there were a few other ingredients mentioned, right? Like short interest and options flow?
Exactly. Three things commonly line up: low float, heavy short interest, often above 20% of the float, and strong call option activity. When those three show up together, you get squeeze potential plus momentum players piling in through options. When you look at the data, that combination accelerates price discovery.
Mm-hmm. So today's examples, they were reverse takeover companies. How does that structure change the picture?
Reverse takeovers, or RTOs, often bring companies public with a compressed free float. Insiders hold a lot of the shares. Add a recent reverse split, and the tradable float can be tiny. That structural scarcity primes a stock to move fast once traders notice a catalyst or social chatter ramps up.
Right.
And to add to that, active options flow and rapid retail chatter act like fuel. A single viral post can bring thousands of new participants into a thinly traded name, and market makers respond by widening quotes. That widening can make intraday gaps look even larger.
Interesting. So market structure plays a real role, not just the headline news.
Precisely. But, and this is important, claims about what market makers did in any specific name need trade-level verification. Analysts note that widened spreads are a common consequence in thin markets, but you shouldn't assume a single mechanic without looking at the tape.
Mm-hmm.
Yeah, that's a good point. Also, RTOs are becoming a more common route to the public market because they can be faster and sometimes cheaper than a traditional initial public offering. That means more companies are trading with concentrated ownership, more low float setups overall.
Okay, so more RTOs could mean more of these dramatic microcap moves. Sounds exciting, but there are risks, right?
Absolutely. Volatility is the double-edged sword. Rapid upside can flip into a sharp decline when buying dries up. Dilution risk is very real. Many of these companies will need to raise capital, which can increase the float and pressure the price. Also watch for insider lockup expirations and convertible securities, like warrants, that can add supply.
Short reactions. Mm-hmm. Right. Interesting.
For traders, the playbook is straightforward but discipline-heavy. Scan for floats under 10 million, ideally under 5 million. Watch for unusual call volume and block trades. Monitor short interest above 20%. Track upcoming financings and lockup expirations so you can estimate dilution risk. And use tight position sizing with defined exits. Especially avoid large overnight exposures unless you really understand the stakes.
So, no guarantees, but a repeatable framework. Any closing thoughts on what this means for market activity more broadly?
Data suggests these episodes bring volume and attention back to public markets, which has positives, better price discovery, and new opportunities for research. But they also bring higher trading costs for passive participants and more realized volatility. For active traders, it creates alpha chances. For longer-term investors, it sharpens the need to separate short-term noise from businesses with real growth.
Great. Before we wrap, quick practical checklist for listeners.
Sure. Scan float under 10 million. Watch unusual call activity. Check short interest above 20%. Monitor dilution signals like upcoming financings and lockups, and size positions tightly with clear exits.
Perfect. Thanks, Aiden. And for everyone listening, a few final takeaways.
Happy to help.
Key takeaways coming up. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai.